Good morning. I'm going to just give a quick overview of the regional economy, what's been going on, with a focus on what's happened since our last briefing last summer. So looking at the region as a whole, as President Dudley had alluded to, in the second half of the year of 2011, economic activity leveled off in New York State and New York City after growing at a pretty decent pace in the first half. And in contrast, activity accelerated in New Jersey and rebounded in Puerto Rico. When you look at the job situation specifically, regional job growth has slowed despite the fact that the nation's been going along at a moderate, steady and moderate pace. State and local government employment has rebounded a bit, but it was a big drag on the economy in 2010 and early 2011. Unemployment has declined in New Jersey and in Puerto Rico, but it's edged up in New York City. It's been steady across New York State. And the housing market has weakened, but to a lesser extent than nationally. And of course, many households in and around New York City especially remain under financial stress, largely reflecting that. Now, I'm going to start off with our Index of Regional Economic Activity, which is a composite measure. We just this morning, in fact, released the December number. This is what it looked like. It's a composite of employment, unemployment, a measure of hours, and a measure of wage and salary earnings that are combined together and smoothed. And we've indexed it on this chart to the end of the beginning, of the recession in late 2007, where it's set to 100. And you can see that New York City was looking pretty good at the last briefing. It was on a steady growth track. Recovered, the economy had rebounded a good part of what it had lost during the recession. New York State was also on an upward trajectory. It's not working. There we go. Since then, things have sort of leveled off. We've had a little bit of a slowing in the local economy. If you look at New Jersey, on the other hand, New Jersey had been flat. As of the last briefing, it had looked like the downturn had ended, but there was really no sign of a pickup. Now we, in fact, do see a pickup in New Jersey. Puerto Rico has had a much longer and deeper recession, but even Puerto Rico has seen a bit of an uptick here. Now, looking at employment specifically, this is the nation as a whole, and you can see that it's been recovering painfully slowly, but it has been on an upward trend. Employment's risen by 0.7%. New York City has pretty much tracked the nation with a few bumps here, but you can see that it appears to remain on an uptrend. New York State job growth has slowed quite a bit, but it hasn't really weakened. And New Jersey, you can see, especially in the last few months, has seen some, moderate, at least, job growth, pretty much tracking closely with the national average. Puerto Rico still seems to be bumping along the bottom. Now, what about state and local government? The last time we met here in August, for those of you who were here, we expressed some concern that's about the drag you have from state and local government. And what we're showing here is state and local government. It wasn't until after the recession ended in mid-2009 the state and local governments, both nationally and locally, really started cutting jobs. But you can see that since between mid-2009 and mid-2011, this is what we were seeing. We were seeing declines across the board, and especially in New Jersey and, of course, in Puerto Rico. Now, what's bringing that up to the present? U.S. has seen, this is the cumulative job decline. Things have gotten a little bit worse, but not dramatically at the national level in terms of state and local government employment. But across our region, in New York State, in New York City, and even in New Jersey, where we saw very steep cuts, you can see that it's not down quite as much from mid-2009. So there's been a little bit of a comeback in government employment. And the same is true in Puerto Rico. Now, turning back to total employment, we've seen below average growth. We've seen some slowing in growth across the region as a whole. How does that break out locally? And what we've done is we've categorized these metro areas across the region into those that are doing better than the national average, which was 0.7% job growth. And you can see you've got New York City there, northern New Jersey, parts of northern New Jersey, Albany, Glens Falls. But most of the region has been doing below average. So the light blue areas have seen below average job gains. Rochester's actually doing quite well, but when you look June to December, the growth looks only modest. But these other areas have been kind of underperforming. And then the brownish areas, particularly areas like Ithaca and Elmira, have seen a lot of weakness in employment since middle of last year. Long Island has also been quite weak, as have some of the northern suburbs and parts of New Jersey. Now, turning to the unemployment rate, this is what's been going on nationally. Those of you who follow these numbers closely know that the unemployment rate is based on a different measure. It's based on what's called the household survey. And there are two things, obviously, that can contribute to unemployment. There's labor force participation. If more people are looking, you can get a higher unemployment rate. Now, the decline we've seen in unemployment nationally is encouraging. It's still painfully high, and it's still painfully high in the region, too. New York City, in contrast with the U.S., has seen an uptick in unemployment. But I should mention that this uptick is completely due to more people looking for work. So in other words, it's not that there are more people or there are fewer people who are employed, it's that there are more people coming into the labor force. So at best, though, New York City has been pretty stable in terms of the job situation. New York State also, things have kind of been level since since the last briefing. New Jersey, we've seen, it's hard to see on this graph, but we've seen a little bit of a downtrend in unemployment. But in New Jersey, it's really much better than it would appear. The reason is that in New Jersey, there's actually been a very strong increase in labor force participation. So what's happening is there are actually many more residents are actually employed. More people have come in, started looking for work. The unemployment rate has still come down because the number of people who have found jobs has been outpacing the entry of new people looking for jobs. So on this measure, New Jersey is looking quite good, and the unemployment rate is as low as it's been in a couple of years. Puerto Rico is, talk of painfully high unemployment. It is at a 2.5-year low, but as you see, it's Puerto Rico has a high structural rate. It's just much, much higher than anything we see on the mainland. Now I'm going to look, and this is the whole thing together. Now I'm going to take a closer look at New York City and Wall Street employment. Wall Street employment, as President Dudley noted, is an important driver of the local economy, and you'll see that upturns and downturns in total employment, which is this gold line, excluding securities, tend to be preceded by turns. So in other words, Wall Street is a pretty good leading indicator at turning points of total employment. In this latest recovery, that hasn't been the case, and I'm going to show you this little inset. What's happened this time is we actually started to get job growth. This is going back to the early stages of the recovery in late 2009. We actually started to get job growth in other sectors before Wall Street, which is unprecedented. It's highly unusual, and it's actually unprecedented in recent history. And since then, what you've seen is that total employment, the gold line, has been on a steady uptrend, whereas securities industry employment, especially in the last year or so, especially in the last 6 months or so, has come down. And you've gotten other sectors more than making up for this decline. And those sectors specifically that have been doing well are things like education and health, professional business services, leisure and hospitality, which is related to tourism. So there are two ways to look at this. One way is that it's encouraging, given that we've had job cuts in the securities industry, it's encouraging to see that these other industries are picking up the slack. On the other hand, it's discouraging because historically securities has been a leading indicator of employment, so it's a little bit worrisome that it's declining. And it's also worrisome in terms of tax revenues, because for things like education and basically everything that the state and city do are highly dependent on revenues from the securities industry. So turning quickly to housing, the U.S. housing market You've had home prices continue to decline since the last briefing over the past year. You've seen the same thing in the New York metro area, which is a little discouraging because here and in New York State, things were looking a little bit to be on the up and up at the last briefing, and prices have reversed course a little bit and declined, though not as much as nationally. New Jersey also, you've had a little bit of a decline in home prices again, not as much as other parts of the nation, but this obviously is a big area of concern. And finally, we do a quarterly survey of credit conditions. This map basically goes county by county and just simply looks at the delinquency rate, which is the total debt balance of households and what percent of that dollar amount is more than 90 days, which is considered severely delinquent. And the national average is 7%, which is really quite high. A lot of that is due to mortgages, and a lot of what's going on in the region reflects mortgages. And what you see from the map is that areas in and around New York City tend to have higher than average delinquency rates, as well as Puerto Rico, and that all of upstate has had relatively low delinquency rates, though still rates of around 4, 5, 6% are still reflect a lot of stress among households. So you're continuing to see households under stress across the region, especially in the New York City area. But there is this sort of dichotomy, whereas upstate, because home prices have been more steady, has not been hit as hard in this respect as downstate New York. So just to sum up, we've had mixed trends during the second half of last year. Economic activity picked up in New Jersey and Puerto Rico. In contrast, it's leveled off in New York State and New York City. Unemployment remains high throughout the district, painfully high, though New Jersey and Puerto Rico have seen some encouraging improvement. New York City is still seeing job gains despite the job cuts on Wall Street. Home prices have weakened, not as much as nationally. And finally, state and local government employment fell in 2010 and early 2011, but has come back a little. It remains weak since then. And my colleague and education expert here, Raji Chakrabarti, is now going to get a little bit more into what's going on in state and local government. When you see what's going on with state and local government employment, a large chunk of that employment is public school teachers. And so the whole public school system is a big, big part of state and local government finances. And rather than looking at the employment aspect, Raji is going to go into looking at the school finances and how that's being affected. Thank you.